Hello everyone, this is Dr. Hessa Al-Fadhel, the course coordinator for Accounting 112. In this video, I'm going to explain Chapter 6, Part 1, which talks about the specific identification. The main title of this chapter is Inventories and Cost of Sales. This is also one from the important chapter that you have also to pay attention. The first learning objective in this chapter is to compute inventory in a perpetual system using the method of specific identification, FIFO, and weighted average. So we have three inventory system methods in accounting. We have specific identification, we have FIFO, and we have a weighted average. What do I mean by inventory method? So now, if you are a company that sells merchandise, or in other means, company that sells product, of course you're going to have an inventory. And inventory means the stock of the products. So each company that they sell merchandise or products, they have to organize their inventory. In accounting, we have those three methods in order the company organize their inventory in a very systematic way. So they can know how much is their beginning inventory at the beginning of the month and what is their ending inventory and what they did, what was the movement inside their inventory. So of course, if the company purchases merchandise, which means that their inventory is going to increase. And when the company is going to sell merchandise, their inventory is going to decrease. So those inventory methods will help us to organize and track all of these movement in the inventory. Okay, now let's see the third transaction. In August 14, what the company did some sales. Now remember, because we're doing specific identification, I'm not going to take the information provided in the table for the sales. Now when it comes to the sales and you're doing the specific identification method, I'm not going to go and take the 20 units multiplied by 130. I'm going to check the additional information or specific information. Because we're doing specific identification method, so when it comes to the sale, you need to go to the additional information and check, because they are going to give you exactly what are the transaction of the sold items. So they told me here, if I go to the additional information or specific information, that's why we call it specific identification, because they are going to tell me exactly or specifically what did they sold and from where they sold it. So in August 14, they say that they sold 8 bikes, which cost them 91 each from the beginning inventory. So it means that they took 8 bikes costing 91 each from the beginning inventory. So it means that they go to the beginning inventory on the table and they took 5 units. So in the beginning inventory, I have 10 units, but now they sell 8 units. So how many left? How many, I would say, the inventory will be, or the units will be in my inventory? It's not 10 from the beginning inventory. Why? Because I have 10 and I sold 8, which means that now I have only 2 units left. So that's why now I'm going to record in the table in August 14, and I'm going to record those information in the cost of goods sold column. So I'm going to say 8 multiplied by 91 equals 728. So now why 8 units multiplied by 91? Because they told me in the additional information that they sold 8 bikes and it cost 91 from the beginning inventory. So they specify exactly from where they sell the bikes. Then they told me they sell also 12 bikes costing 106 from August 3rd purchases. So if you go to August 3rd purchases in the table above, so we have 15 units already and they sold 12 units. They sold 12 units from the August 3rd purchases. So now I have 15 units minus 12 units. It means now after sales of 12 units, only I have 3 units left from August 3rd purchases. So what I'm going to do now, I'm going to record those sales information in the cost of goods sold column. Why in the cost of goods sold column? Because in this column I have to record all my sales. So I'm going to say 12 multiplied by 106 equals to 1272. If I add them together, it means that the cost of goods sold for this August 14 sales is 2000. Now remember that if the company they sold merchandise, it means that their inventory is going to decrease. Why their inventory is going to decrease? Because the company they sold from their merchandise. So their inventory is going to decrease. So now remember, if you're selling items, okay, when you're going to report the inventory balances, what you're going to do, you're going to take the units left. How many units left from the beginning inventory after the sales? As you see at the above table, we said that we have the beginning inventory 10 units, but we sell 8. So the total will be 2. So I'm going to say 2 multiplied by 91. Why? Because 2 units left from after sales from the beginning inventory. Okay, what about the August 3rd purchases? So I'm going to say 3 units left from August purchases. So I'm going to say 3 multiplied by 106. So if I add them together, okay, how much it will give me? 500. So we can see that my inventory is decreasing. Why it's decreasing? Because we just sold merchandise. So whenever we sold, it means my inventory is going to reduce. Now remember, when you have sales here and you are going to report the inventory balances, we always take the units left and we multiply them by the cost. Now let's move on to the next transaction. So in August 17, the company did purchases. So remember, if the company, they will purchase, I'm going to take the information from the table, and any purchases, it means that it will increase my inventory. So the company purchased 20 units and each unit cost them 115. So it means that we have a total of 2,300. So what I'm going to do, I'm going to record in the table, I'm going to write August 17, and I'm going to record the information of the purchases under the goods purchased column. Why I added the 20 multiplied by 115 in the goods purchase column? Because the company did purchases. So if the company did purchases, I'm going to put the information on the goods purchased. So I say 20 multiplied by 115, it will give me 2,300. Now remember, if I'm going to calculate the inventory balance, what I'm going to do, I'm going to take the what's left in the inventory in August 14. So what's left in the inventory of August 13? We have 2 units multiplied by 91. So I'm just copying them directly. And then I have 3 units left multiplied by 106. So I'm going to copy how many units I have from the previous transaction to the new transaction, and then I'm going to add my new purchases. Then I'm going to multiply them and then take the total, and the total will be 2,800. So now we can see that the inventory is increasing. In August 14, the inventory balance was 500, but now in August 17, it's 2,800. Why? Because the company, they did some purchases. Now, if we move to the August 28th transaction, we can see that the company, again, they did purchases. So they purchased 10 units multiplied by 119, and it means that the total cost of the purchase was 1,190. So basically, I'm going to put the information in the table. So I'm going to say August 28, and I'm going to record the information under the goods purchased. Why? Because the company did purchases, and you have to remember that whenever the company is doing purchases, you have to record it under the goods purchased column. Because the company is purchasing, so what will happen to the inventory? The inventory is going to increase. So when I'm going to calculate the inventory balance, I'm going to take, first, I'm going to copy the two units multiplied by 91. So what is the units balances of the last transaction? I'm going to copy it, as you can see here highlighted by, in green. 2 multiplied by 91, 3 multiplied by 106, 20 multiplied by 115. Those are the units that we have as a balance from the previous transaction. Then I'm going to add the 10 multiplied by 119, which is my new purchases. Then I'm going to take the total. So we can see here the inventory balance in August 28 is 3,990. Why? It's increasing because the company did purchases. So now we'll do the last transaction, which is August 30. So in August 30, if you can see in the table above, the company did some sales. So because we're doing the specific identification method, so I'm going to take the information related to the sales from the additional information. So they give me here A, B, and C, and D information regarding the sales, and they give you specifically how much they sold from each of the transaction. So they say in A, they sold 2 bikes costing 91 from the beginning inventory. So they took the 2 units, the 2 last units, and they sold it from the beginning inventory. That's why I'm going to record the information in the cost of goods sold as highlighted. Why I'm going to put the information in the cost of goods sold? Because we are doing some sales. If we are doing some sales, I'm going to record the information in the cost of goods sold column. So I'm going to record 2 multiplied by 91. Then they took 3 units from costing 106 each from August 3rd purchases. So August 3rd, how much left from the inventory? 3. So they sell the last 3 units from August 3rd. That's why we record it as well in the cost of goods sold column, and we say 3 multiplied by 106, it will give me 318. Now in C, they said they sell 15 bikes costing 115 each from August 17 purchases. If I go to August 17 purchases, it means they take here 15 units. And already in August 17, we have 20 units. And now we are going to sell 15. So how much left in the units? I'm going to say 20 minus 15. It's going to give me 5. Okay? And then how I'm going to record, I'm going to say 15 units. And the cost of goods sold, I'm going to say 15 multiplied by 115, which is 1,725. Again, D and the additional information, they told me they sold 3 bikes costing 119 from August 28 purchases. So if I go to August 28 purchases, that we have 3 units, but they sell out of the 3 units, 10 units, 3 units. So now if I have 10 units and I sell 3 units, how much left in the inventory? How many units left from this August 28 purchases? 7, because 10 minus 3 will give me 7. So I'm going to record here 3 multiplied by 119. So if I take the total of all of the sales here, I'm going to get here 2,582. And now, because the company did sales, of course, my inventory balance is going to decrease, because whenever the company is selling, the inventory, it means, is going to decrease. So remember, when you are going to record the inventory balance after a sales, we are only going to take the units left and we are going to multiply it with the cost. So now in August, on the beginning inventory, I have 0. Why? Because I have 2 and we sell 2. And August 3rd, I have 3 left units and I sell 3 units, so I have 0. And now I only have 5 units from August 17 and 7 units from August 28. So what I'm going to write here, I'm going to take the 5 units left from August 17 multiplied by 115, which is the cost of August 17, and I'm going to take the 7 units left from August 28 purchases, and I'm going to multiply it with the cost of August 28, which is 119. Then I'm going to take the total, which means that I have now 1,408. So this 1,408, I'm going to call it the ending inventory of August, of the month of August. Okay, so our beginning inventory in August was 910, but my ending inventory in August 31st, which is 1,408. So also, if you want to calculate your total cost of goods sold, you're going to take 2,000 plus 2,582. It means that the total cost of goods sold of the month, which is 4,582. This is the end of Chapter 6, Part 1. Please check the video of Chapter 6, Part 2.